Good morning, everyone. This is Frank Ochoa with your pre-market update. Um, just looking at the ES here, we had a nice little decline yesterday, and we hit our 1822 primary weekly level. That was a level I thought we could attain even with the shortened week. But the secondary weekly level doesn't come in until 1813.75, and that might be a tough stretch to get down to that level. But we have to see what happens up here at 1833 to 1834. That's been a key zone, over the last week, basically. 1833-34 had been support, then it turned to resistance yesterday. We got a nice move into those 1822s, and I think what was important or interesting this morning is overnight trading price came down and retested those 22s, formed a little bit of a lower low there at 1820 half. And then now we've bounced all the way back to 1830. But price still hasn't ventured beyond that 1833-34 zone yet. That zone right there is important. And there's also a 5-day VPOC up there at 35.75. So if price gets up into that zone and can't get beyond it, that could be an area to consider for sells for a retest back toward 1820 to 1822 support. A violation 1820 opens up 1813.75 with a shot to get all the way back to the key level at 1806.75, which was prior resistance. So that's more of kind of a swing move there. But for today's market here, obviously we have support at 1822 to 1820, and then we have 1833 to 34 resistance. We could very well see trading range activity within that range, and I think only a breakout from that range, those are key levels enough that if you get outside that zone, you might see some movement. But for right now, it just looks like kind of a back and forth between 1820 and 1833.34. All right, taking a look at the crude oil chart. This one's interesting here. We had a huge day yesterday. I think the range on the day was 360% of average, something like that. And that's just enormous. We basically violated every single key level on the chart. On a medium-term perspective, taking out 96.55, 98, 95.85, and now we're sitting here just above 95 with a clear range that has developed from 95 up to 95.80. After such a big, expansive, trending move like what we saw yesterday, price tends to trade more in a range in the upcoming session. So we could be more range-bound if we try to hit new highs or new lows. Be wary because those new highs or new lows could be reversal points back into the range. You really have to break and hold to get outside the range. So price needs to really get down below 95s in order to have a shot to reach the day's primary downside target, which I have at 94.75, followed by the secondary target at 94.42. On the upside, there's that 95.85 key level. Breaking beyond that zone introduces the primary target above at 96.04 with a secondary at 96.38. If we do get above those 95.85s, there's going to be a lot of interest to get back toward 96.40 to 96.55 for a retest. Otherwise, if you can't get back above 95.85, there's more downside ahead for crude oil. So watch that range. It could be more range bound, but we break outside that range, you could see additional trending behavior. That's all I have for right now. Let's see how this thing plays out the rest of the day. Good luck. Good morning.